Good governance is an essential factor for any entity to ensure its ethical behavior and accountability. If we analyze the root cause of most of the issues today in the corporate world and the country, it is the absence of a proper governance structure. So today we invited 3 experts in corporate governance to share their knowledge with the purpose of fulfilling a national duty. So let me introduce our 3 panelists today. The first panelist, Dr. M.M. Shamil. Dr. Shamil is a senior lecturer at the University of Kelaniya and currently serving as the head of the Department of Commerce and Financial Management. Dr. Shamil obtained his PhD from Kelaniya University, Malaysia, and Master of Business Administration degree from the University of Colombo. He obtained his bachelor's degree from the University of Kelaniya. Dr. Shamil is a known researcher in corporate governance, sustainability reporting, and strategic management. So I warmly welcome Dr. Shamil to the National Policy Talk. Then we have Ms. Semini Kuruppu. Ms. Semini Kuruppu is an assistant manager in the Corporate Affairs Division of the Securities and Exchange Commission of Sri Lanka. She has over 9 years of work experience in audit and assurance and the capital market regulations. She is a member of the Association of Chartered Certified Accountants of UK and holds a Bachelor of Science Accounting Special Degree with first class honours from the University of Sri Jayawardhanapura. I warmly welcome Ms. Kuruppu also to our first ever National Policy Talk. Then we have Mr. Tishan Subasinghe, a fellow and council member of the Institute of Chartered Accountants of Sri Lanka, the managing partner of Moore Stephens Iyer and the managing director of Moore Stephens Consulting Private Limited. He holds MBA in Finance from the University of Colombo. He has provided leadership as the chairman of the National Conference Committee, chairman of the Annual Report Awards Competition of CS Sri Lanka, and also the chairman of the Examination Committee of CS Sri Lanka in recent years. Also, Mr. Subasinghe serves on the director boards of various quoted public companies. Welcome, Mr. Tishan, also to the discussion.
Thank you.
Okay. So, starting our discussion, I would like to raise my first question to Mr. Tishan. Right. So, we know that in 1997, the first corporate governance code was introduced in Sri Lanka. After that, in 2003, 2008, 2013, and also in 2017, the codes were reviewed and revised through a consultative process. Can you first explain the main grounds for the revisions every 5 years? So, is there any reason to review the code every 5 years' time? And also, can you elaborate the legal background of the corporate governance code of Sri Lanka?
Yeah, thank you, Dr. Madhurika. Yeah, corporate governance actually, if I just give an insight to the background emerging from the agency theory and popularized through the Cadbury Code of the UK and mandated and spread by the IOSCO, International Organization of Securities Exchange Commissions. From time to time, the code as well as the law with respect to corporate governance needs revision. Why it needs revision? It is to respond to the market conditions in the sense respond to incidents that the world, the corporates in maybe other parts of the world are experienced. Now, let me give you an example. Take Enron. After the Enron collapse, many changes being brought into the corporate governance regime. Right. So that's why for every 5 years the code needs revision because of the volatility in the business environment and business models are getting changed. Along with that, the requirements of corporates are getting changed, and people find new ways to sometimes overcome or to tackle some of these rules and regulations, which requires again strengthening some of the good corporate governance practices. So, not necessarily every 5 years, as and when there's a requirement, the code will get changed. I think this is nicely coordinated across the world through the IOSCO. Even Securities Exchange Commission of Sri Lanka is a member of the IOSCO. So they set the rules there and then push down to other countries. Then the corporate governance regime, if you ask me about the legal perspective, number one is the Companies Act, number 7 of 2007. So there are many provisions that addresses the director's responsibilities, duties, then breaches, the offences, then the penalties for directors. So that is part of the law. Then we have the Securities Exchange Commission regime by way of various rules, directives and circulars. Then we have Colombo Stock Exchange listing rules, categorically listing rule 7.10. Then we have industry specific corporate governance regimes. For instance, insurance industry, through the Insurance Industry Regulatory Act, there are certain corporate governance requirements, and there is a circular issued by the Insurance Regulators Commission, IRCSL. Then there is another corporate governance regime directing the banks, and this particular circular being issued by the Central Bank of Sri Lanka. And the last one requires a report, agreed upon procedure report by the external auditors. So it adds more value to the reporting. So overall, this is the background from the legal perspective.
Okay, thank you, Tishan. Actually, I think it's a good start, because always whenever we talk about the corporate governance, always we talk only about the code of governance and also the Securities and Exchange Commission's listing rules. But we have to remember that there is another thing on top of everything, that is the Companies Act.
If you don't mind, Madhurika, we always look at the private sector.
Yes.
But from the state sector also, you have the establishment code in FRSS,
yes,
and to cover the state sector. Compliance, it's a different question,
yeah.
but then
but we have that.
We do have.
Yeah. Okay, thanks. Right, so if I then turn to Ms. Semini, that you are representing the Securities and Exchange Commission. The Securities and Exchange Commission is also a joint partner of CA Sri Lanka in revising the governance code. Although there is a governance code in Sri Lanka, still we can see many collapses in the corporate sector. Right, so in that aspect, do you think that there are some loopholes in the current code of governance? And as the Securities and Exchange Commission, so what is your role in identifying that kind of regulatory matters and the compliances issues in the coded public companies?
Okay. First of all, I have to mention the Code of Best Practice on Corporate Governance is adopted by the listed public companies on a voluntary basis. In respect of the mandatory requirements, the requirements are stipulated in the listing rules published by the Colombo Stock Exchange. So, if there are non-compliances with respect to the listing rules, the companies are supposed to disclose certain information in advance, like immediate basis, and then the CSE is supposed to take certain actions. Now, prior 2018, listing rules didn't have rules relating to enforcement actions. So, because of that reason, there were certain collapses due to lack of proper corporate governance practices in companies. But after the introduction of enforcement action into the listing rules, there are ways and mechanisms laid out in the listing rules to identify non-compliances with the minimum corporate governance requirements and take appropriate measures in a timely manner. That is after 2018. In addition to the corporate governance non-compliances. Now, if you take a company, there can be a company can collapse due to various reasons. For an example, one indication is having emphasis of matter on going concern. It might, auditor's report might have qualified audit opinions or adverse opinions, or else disclaimer of opinion. So for that also, in the current listing rules, we have introduced enforcement actions to identify the red flags in advance and take appropriate measures. That is number one. And the other thing is 2000, the current minimum requirements applicable to the public listed companies, it was introduced in 2008. So it has to be amended in a timely manner to be in par with the global jurisdictions, other jurisdictions. So identifying that loophole, we have actually published a public consultation paper back in 2021 after carefully analyzing the other jurisdictions in developed countries and developed markets and emerging markets. When developing the public consultation paper, we captured the views of industry representatives like representatives of public listed companies and regulators, and also professional bodies like CS Sri Lanka and also Institute of Directors and CFA Sri Lanka. So after getting the views of those stakeholders, we published the public consultation paper, and then we got the responses from the industry, and we are now in the process of revising the listing rules with respect to the corporate governance aspects.
Okay, thank you. So now when we take Tishan and Semi, that you both are explaining about this governance code with the perspectives of the professional body and the regulators, right? So we have our academics also in this discussion. So Dr. Shamin, from an academic perspective, do you think the present governance code in Sri Lanka well explains the real governance issue in the country?
Yeah, Dr. Madhurika, now if you take the governance code, it falls within this so-called wide scope of, say, governance and accountability. So there is this tendency in, say, corporate governance, people tend to look at, say, how many directors are there, how they are appointed likewise. But then preparation of accounting statements on time and submitting them on time and getting them audited, right? And meeting various compliance requirements, not only in terms of accounting and finance disciplines, also in terms of legal fraternity, right? So all of them are part of the so-called broad governance and accountability framework. So corporate governance is the only set of, say, guidelines, or it could be a set of best practices being proposed in terms of, say, how a company can go about forming an independent set of directors where they would provide strategic direction for the companies. But we should not forget that there are other aspects to this. And I think Tishan was mentioning how law could come into play. For example, if there's an oversight issue from the point of the directors, there are rules and regulations around the world how that can affect their duties are being performed, right? So I think some of us are familiar with the famous case of Satyam in India, where some of the directors recognized that there was a problem and they started withdrawing from the board, and that gave signals to the market, and the company further went into turmoil, right? So we should not always look at corporate governance as a set of code, but it's also embedded in the existing system of governance and accountability. So that's what it is. But if you look at the Sri Lanka, say, regulated regime, it's basically we have set of regulations which are mandatory. Like Tishan mentioned, the Companies Act. It would, for example, tell us the age limits, whether the director is fit to perform his duty. So there are certain conditions being put forward. Then you have what we call what Semini mentioned, the set of best practices being proposed, which has been evolving from 2008, 2013 to 2017, and there are some changes as well in 2017 report. Now this is basically targeting, say, any company registered in the coming under the Companies Act. On top of that, we have companies which may show interest to list in the Colombo Stock Exchange. That's where the listing rule comes into play, and they will have to meet certain, say, regulatory requirements, and I call it a minimalist approach, because seems to be a significant, say, difference in terms of what's being proposed at CSC continuing listing rules plus compared with the best set of practices. So if you take a Sri Lankan company, there are some companies which might go with the minimalist approach of reporting what governance they are adopting or practicing. Then there are other companies which more go into an in-depth discussion of what they are practicing. So we see this, say this division in terms of how governance are being practiced. Again, like I mentioned, there is also a set of industries like banking and financial institutions which are basically compulsory upon them to follow the guidelines issued by the central bank. So what we have is a kind of a hybrid framework or a regime where some companies, for example manufacturing company, it's not mandatory in terms of going for very wide set of, say, practices in corporate governance, but they can adopt a minimalist approach. On top of that, you might have a bank or a finance company where they have a very strict regulatory regime compared to say a manufacturing company. For example, if you go with the central bank guidelines, you might have a minimum number of directors and maximum for financial institutions, where you will not find it with, say, a manufacturing listed company. On top of that, if you compare these codes, the general requirement is to have like a minimum two committees, like audit committee, for example, is one of the most popular ones. Again, that's because of the governance and accountability issue that comes in. But if you look at the finance sector, it's mandatory upon them to have integrated risk management review committee, which is not the case. You don't see them being practiced in, say, manufacturing company, but any business we know they do have risk to deal with, and to what extent that aspect is discussed in terms of say reporting is kind of a question, because it seems to be on the lower side. So these are some differences that we see when it comes to what's stemming out of the existing regulatory framework, as I said. And I also see that if you take any country, their sort of regulation or framework reflects the market condition, and we have a lot of, say, characteristics as an economy more towards the frontier market. So I guess if our regulatory regime might seems to be quite weaker compared to an advanced economy, that I guess reflects the market condition. And there will always be the case where how much regulation, because for example a new company walking into the CSC, they may not be able to absorb all that compliance requirements. So they will need some say time, right, to incubate how we go about these practices. And some of these companies might be family-owned business. They need a transition time to adopt, right, in terms of giving the leadership away, giving the management away, right. So that sorts of things need to be considered in the long run. So that's how I see the current situation comes to the regulatory regime.
Okay, Tishan, anything that you want to add to the comments of Dr. Shamil?
Yeah, Dr. Shamil's last point, this transition. So I recently think, this year beginning joined a company which got listed last January. Actually, I joined the board last year, November or December. This transition is very important. It has to be handled diplomatically. So all these best practices, we have to understand that these medium scale enterprises that are getting listed on the stock exchange, those have been run by either a family or one or two individual. They are used to it. They are new to all these best practices because they have been focusing on the operations, and because of the requirement to take or admit non-executive independent directors, yes, they admit. And now sometimes after admitting and after getting listed only, they really understand the gravity, then they have to comply. Therefore, that has to be handled diplomatically, not only with the owners or the other executive directors, even with the staff. They are not used to the reporting. You can't go and all of a sudden put pressure on them. So within a reasonable period of time, if there are certain non-compliances with the due understanding of the other directors, etc., we have to make a plan to introduce the proper standards and to ensure compliance. I think that is expected from non-executive independent director. So fair amount of time to be spent. That's the challenge. The non-executive independent directors, when it comes to a newly listed, is fair amount of time, especially the audit committee chairman. And also, if it is within a complex group structure, the chairman of the related party transactions committee both have to play a role. So that is very important.
Okay, I will come to that point again because I have some questions related to that one. I will come to that point again. So my next question is also to Mr. Tishan. Now, when we take the governance code in Sri Lanka, it addresses agency conflict in both horizontal and vertical aspects, right? So the governance code in that 2017 issued governance code claims that the code addresses the owner-manager conflict and also the major-minor shareholder conflict, right? So I can understand this, how they are addressing the owner-manager conflict, but I have a doubt. So can you explain how the governance code in Sri Lanka, the present governance code in Sri Lanka, helps to resolve the major-minor shareholder conflict?
Right. So it's like this. Number one, I think more than the code, the Companies Act gives protection to the minor shareholder. So if I am not mistaken, under section 224, 225 or 226, referring to those sections, minority shareholders can basically invoke their rights, right? They are, and not only that, the minority shareholders can also go for various kinds of actions, derivative actions, and so there are certain procedures. And if I refer to the voluntary code, as per listing rule 7.10, now, well, this code of sometimes this minority stakes rights are compromised, maybe due to related party transactions. Now it is mandatory to follow the code since 2016. Right? It was made voluntary 2013, made mandatory 2016. So it's adding a lot of strength in terms of protecting the minority rights of the shareholders. Then this executive, non-executive director balance, the audit committee, related party transactions committee, nominations committee, all these things would add on to protecting the rights. But more than the code, Companies Act gives more weight in terms of protecting the rights of the minorities.
Okay, thanks. Right, Ms. Semini, now as the regulators of the capital market, do you think there is a mismatch between corporate governance practices and the corporate governance reporting by Sri Lankan listed companies?
It's like this. Most of the public listed companies do practice the corporate governance code published by the CS Sri Lanka. Though that is done on a voluntary basis. But when it comes to the listed arena, listed companies, what they are supposed to follow is the mandatory requirements are in the CSE listing rules. So we actually check the compliance in that angle. Even though the companies do voluntary disclosures, they can follow various guidelines. Now in Sri Lanka, most of the companies are following either GRI reporting standards or else integrated reporting framework. So based on whatever the guideline they want, they can do their disclosures. But what we are after is with respect to the mandatory requirements they have to follow. Well, relating to the mismatch, I would say it's like this. The listing rules, the companies, public listed companies are supposed to, bound to follow the listing rules. They can't practice something else and report another thing. Because as per the SEC Act, there's a contract between the CSE and the public listed companies to follow the whatever the rules exchange publishes. So if they have are not in compliance with that requirements, CSE can take actions. So the onus is with the public listed companies to report what they practice with respect to the minimum corporate governance requirements. That's it.
Okay, Tishan, now actually connecting to the same point, you are working, that you have worked as the chairman to the annual report awarding ceremony of the CA Sri Lanka. Right, so what is your experience regarding this one, that the mismatch between the practice and the reporting?
In fact, one point in time we were discussing whether we had to discontinue with the award on corporate governance, because there's a huge risk giving away an award on corporate governance, because using that the corporates can attract huge publicity, and people, the general public would believe in that. And as Dr. Shamil said, if you take Satyam, he mentioned the name of Satyam, the year before the company went into bankruptcy, they were given an award on best practices on corporate governance. I think it was called Peacock Award or something. The following year, the company collapsed. Right? Now, if you take annual report disclosures, purely voluntary, and these corporate management, they are disclosing. Maybe the management, maybe the annual report compiling agency, right? So we have noted instances where there had been copying and pasting of some of the clauses, paragraphs, etc. When it comes to banks, it's different. When it comes to banks, agreed upon procedures to be performed on compliance with the corporate governance circular issued by the central bank. So it fairly reflects the true picture. We can say like that. But other companies, there are companies who are following good values. So they do not report what they do not practice. Whereas personally, I have seen some companies, they have just copied and pasted certain things from other reports. That's my experience. Because of that, now and not only annual report, I served on another judging panel connected to one chamber, and there actually I have experience in the annual report, in the application. In one instance, I could remember certain things being presented, but upon inquiry we noted directors were not aware. And even the annual report towards competition, the format has been changed from this year. At the final round of evaluation, there would be kind of an interview where the interview panel would categorically ask questions in relation to governance practices. That is to minimize the risk in awarding for corporate governance, whatever the reporting done in the annual report. So there has an inherent limitation as to accuracy and authenticity of some of the statements made.
Okay, yeah, I think Dr. Shamil, that is a good point for our research works as well, because we do our research totally based on what the quoted public companies are reporting in their annual reports, right? Okay, so then with that, if I ask this question from Dr. Shamil, I know that you have done so many research on this corporate governance field. So what aspects of the corporate governance are not yet examined in academic research? So as the academics, what we can do more to the development of this corporate governance?
Yes, I think it's an interesting question, Dr. Madhurika. Like, I think you and me, we are working on a kind of a pilot project to look at what kind of research been done in Sri Lanka. So we found a lot of, say, loopholes. But I guess research also reflect to a certain extent the availability of data. So I guess most of the research that we see takes a perspective where they try to see whether, now we know in management in general, whether if there's a good practice been brought forward, we like to see how does it affect the business overall, whether does it improve the returns or profitability likewise. So that's a general tendency we have. So most of the research that we tend to see in Sri Lanka, they are attempting to see whether the so-called some of the corporate governance practices are bringing those values to our companies. Well, most of the results that we have gone through don't seems to be showing that. However, we know that these are like good management practices. They're supposed to be there in companies. Having an independent board, I think, is what at the end of the day we all want, and that's one of the issues that we have to discuss. That's one of the issues I have in terms of research. Most of this research have not gone beyond what we see in the annual reports. Probably we are all the reports have evolved for almost more than a decade. Our research has not taken off to the next level. Probably we need more evidence to establish at the ground level or the basic level what these practices mean to us or for our companies. Whether policymakers are looking at that is a different question in our context. Beyond that, the other issue we have is, now if you look at Sri Lankan economy, I guess most countries, but it's prominent right now. We have three main sectors. We have the private sector, where we have the private companies, mostly registered under, say, Companies Act, right? And we have, say, a listing set of code if the company goes for public listing, or we have the voluntary based set of practices. Then we have the public sector, right? And then we have the SME sector. What we have is a situation, we have set of codes, seems to be well comprehensive for the private sector, and it's voluntary. It's at the discretion of the companies, especially if I'm setting up a private company, it's at my discretion to follow that, right? However, for the public sector, there is always a question. However, there was a pioneering initiative around 2003, where there was a governance code being proposed for the public sector, but there has not been much development beyond that. And I think right now, the economic crisis that we are grappling through to a certain extent, and the issues that are coming out and being discussed in public forums are relating to governance. So I think it's timely for us to look at to what extent we need to enforce governance, not just preaching governance, but getting governance into action. Bringing those changes is what matters, and that is not there. And I don't see research has gone into that. Maybe access to data, access to information is kind of a issue in terms of getting there, because doing research also needs a certain amount of data. The other aspect is where we have the SME sector, and it's kind of the live wire of Sri Lankan economy. For example, look at the number of companies, Colombo Stock Exchange hovering around 300, and we have some new listings in recent times. But that's where we have been. So there's a lot of SME sector and also been affected by the current crisis. And those companies, they tend to struggle to comply with too much regulation. So we need to find a way, how can we get these, even say small companies, to be more compliance driven, but we have to make sure the cost is also lower. And that environment has to be set it up. Somewhere it has to come in. Now, for example, the Chartered Accounting Institute also have these accounting standards for small businesses, but then we have to get them to practice this. There are companies who are doing that, but we have to somehow get them motivated, encourage them. Education plays a role. Training is very important. So I think we need to push that. So we seems to be lacking in terms of research information coming out in those sectors other than the private sector, and even what we are getting from public quoted company used as sample seems to be basic research, but basic research at the moment also matters, because only then we can provide a foundation for next set of research. That's where I see the research landscape when it comes to corporate governance in Sri Lanka.
Okay, actually thank you, Dr. Shamil, for bringing the cases with the SMEs and also the government sector organizations to the discussion. So connecting to that, if I ask this question from Ms. Emini, now we know that you also explained that when we take the corporate governance code, yes, it is a voluntary one, but it will become mandatory through the listing rules only for the listed companies in the Colombo Stock Exchange.
Certain aspects.
Right, okay, yeah. So then what is the credibility that we can give to the stakeholders in the private companies, SMEs, and also the government organizations on good governance? I know that this is something beyond your scope, right? But as an expert in this area, so what kind of thing idea that you can share on the SMEs, the private sector companies, and also the government sector companies? So what is the credibility that we can give to the stakeholders of these companies on their behaviors and the responsibility?
Credibility in terms of the compliance with corporate governance aspects.
I'm not asking actually related to the corporate governance code, but when we take in general,
Yeah.
then how we can give that credibility to the stakeholders of these institutions who are not supposed to mandatory compliance with the corporate governance code in Sri Lanka?
Well, it's like this. If you take a company's perspective, if it's like it depends on the stakeholders the company is dealing with. Now, if you take a public listed company, its stakeholders are different from from a private company. So, if I take since my arena is on the capital market and the public listed companies, I would say there are a lot of benefits of practicing the code of best practice on corporate governance, because even though there are minimum requirements in the listing rules, if a company is following the code and practices the best corporate governance actions they have proposed, then a company can create more value to its stakeholders. Let's say now, if we take employees, if a company practices the better corporate governance within the company, then the employees would be benefited, not only the shareholders, and also the customers, because it's like a machine. If we put correct input to the system, a good output would be there. So since the customers are at the back end, they can get more benefits, like they can get a good product from the company, public listed company, because the company is looking at the entire value chain, not only the shareholders and the minimum requirements to be followed.
Okay, yeah, thanks. I think Mr. Kishan also can add something to that, because actually what I want to exactly know that, do you believe that we need some governance practices to bring into these sectors as well? Because we have that, as you told us, that we have the Companies Act, but what would happen to these SMEs and also to the government institutions?
Yeah. Dr. Madhurika, I think these governance best practices are required for the public corporations and state-owned enterprises more than these 300 listed companies. It's good, I mean, for even these 300 listed companies, yes, they are dealing with other people's money, therefore, yeah, practices to be maintained. But if you really look at the impact on the economy by not complying with best practices by these state-owned enterprises would be much higher than these 300 listed companies not getting complied, subject to banks and other financial institutions, because them not being compliant means there can be collateral damage to the financial services sector, right? Systemic impact. But then these public corporations, the best governance practices have been breached in daylight. You look at the chairpersons of some of these corporations, look at the members of the board, identify the relationships with the, you know, policymakers or the you know, MPs, members of the parliaments, or, you know, ministers, and then where's independence? Alright. I mean, in daylight, some of these practices being breached. Now, take Sri Lankan Airlines. Without the government backing, by now the company would have, airlines would have collapsed. You know, it's already insolvent, but then it would have gone out of business. Same case with CPC. Same case with CEP. Why? I mean, over a period of years, best practices maybe I mean, we can look at many aspects within this organization, but the main issue is good governance. And I see kind of a lacuna in terms of research conducted on these entities. Could be access to information would have been a problem some time back. That is one of the challenges for researchers, access to information, availability of information. But now, Right to Information Act provisions can be used to retrieve information. So I think now if you take most of the research have been done on these 300 companies, the annual reports been cut, chopped, and, you know, done everything, right? But in terms of national significance, I think we have to direct that attention to the public sector now. And by conducting this research, you know, the lapses identified, the issues identified, knowledge created in terms of bad practices can be made available in the public, and the policymakers would take action on that. And if these research being presented and directed to the right parties, so with that the policy framework can be influenced. And this is the best time to do it, given the environment at present. Then the SME sector. SME sector actually, compared to 300, we have more than 40,000 registered companies. Over last several months, some of these companies would have gone out of business, and with the new tax provision, some also may go out of business. Yet there are some companies that are doing well, and you know, my experience dealing with the SMEs happen to be, you know, every company, newly started venture, there are certain phases that the company passes. Well, you have the introductory stage, then you have the growth stage, then you have the maturity stage, then you have the decline stage. At the declining stage, they have to do something different to again have growth, right? Then after the introductory stage and when you are about to reach maturity stage, and at each stage, by trying to go into one stage to the next stage, there's a crisis the organization is facing. Initially, you know, with the available people, knowledge, the operations being, you know, looked at, then the main focus happened to be the cash flow. And later on, you know, if the entities run profitably, then the crisis of proper accounting, proper internal controls would come. I have seen these things. And if those have not been addressed, then the entity would be vulnerable for various misappropriations, frauds, etc. Right? And that time only the owners, after facing several incidents, only owners make up their mind to invest money in streamlining these areas. After learning the lesson, if we go and tell them, they would not listen. Right? But then after some time, they will listen to that. So I have one case study in Kunnagala. You know, it happened some time back, family run business, and once he spoke to me, and I went and met him, and he's a billionaire even that time, and they were having some 30 odd bank accounts. It's a group of companies, and the owner happened to be really stressed out because, you know, inventory losses, and sometimes all of a sudden, even though there's business cash shortfalls, inventory getting expired, right? And finally he was stressed out. Then I said, look, we'll put up a good internal audit team. We started with one person, and fairly qualified good accountant, and we actually got an assignment to streamline these things. So what happened within 2 years, after 2 years, then he wanted to implement an ERP. He understood that, okay, then because his life was getting easy, and he used to work all 7 days, right? All 7 days. And if you take now, he has a separate fully fledged intern audit division. I visited 2-3 weeks before also. A chartered accountant as the head of finance, a full finance division, and now they are planning to roll forward SAP from a different ERP to SAP. And I happened to meet his wife. He said, and this gentleman now works only 2-3 hours a day. Now it's process driven. He understood the value, and that's the value. We slowly we have brought in some good practices. Still it's not fully complying with the code, but then wherever possible we introduce. Now what happened? Then he could pay his attention to some other new ventures. He entered into a joint venture with an Indian party to manufacture certain kind of medicine in Sri Lanka, and set up a plant in Pallekele, and now he's venturing into some other areas. Why? He managed to save time because of streamlining the processes and introducing some good governance practices. That it's a real life case study.
Okay, right. Okay, so I think now we have come to some point where we can wrap up the session. But since you are on board today with our panel, I want to ask one question. If you can explain that to me by taking just 1 to 2 minutes. Right, Tishan, that I know that you are in one side you are an auditor, right, and also you are a council member of the Institute of Chartered Accountants of Sri Lanka, and also I know that you are serving for different boards as a director. Right, so then you also talked about the conflicts of interest, and also the related party transactions in this discussion. So if I ask this question, so how we are managing that with all these roles within one person, how do you manage the possible conflicts of interest? Because I think you can relate that also with the corporate governance.
Yeah, it's a very good question. In fact, the main asset for a professional happen to be the reputation. That's the intangible asset. So once it's affected, if it's been impaired, then you are nowhere in the market. So we have to make sure as professionals, wherever now, I being an auditor and I being a director, if I undertake any consulting or any assignments from that company, then I am violating the Companies Act, directors' interest in contract. Sometimes people may do these things because they may not know the law. I have seen these things happening. But as a well-informed person, I make sure that there are no conflicts, and I make sure that nobody would be able to challenge any of my rules. So I have that comfort, and therefore I can sleep properly in the night. Finally, that matters a lot to me.
Okay, thanks. Right, okay. So then, to wrap up this session, I would like to ask my final question from Dr. Shamil. After hearing from the experts from CS Sri Lanka and also from Securities and Exchange Commission, and also the understanding through academic research, which areas of the governance code should be further improved in Sri Lanka?
Yeah, Dr. Madhurika, rather than probably we can give a list of areas to improve, but then it has to matter to us. It has to matter to our economy and context. Now, you might remember, trying to extend what Tishan was talking earlier now, you might remember that Volkswagen, they became the number one in the world in terms of largest manufacturer. I believe a few months later, Dieselgate came out, and the reputation was lost, and the CEO goes out of the company after probably a few years, as I recall. Boeing, 737 MAX, couple of 2 accidents. Now in the airline industry, losses are not okay. You have profitability, but losses are into future, because if you lose a consignment, say airline stop buying, say set of future planned airlines from Boeing, and that's what they experienced, and they went on with a new CEO. Now what Tishan was referring to is we have certain state-owned enterprises, for example. making losses. And some of the part of the problem seems to be attributable to basically governance issues, right? And still there is no questions being raised on that. So we see how business are being operated, and this in a way ridicules investments and ridicule people who really care, who wants to invest, who want to create a better business atmosphere environment, but it's ridiculed there. Do governance matter to us right now? Yes, and we've seen the outcome of that. But how? Now I'll take two examples. Cadbury Commission was summoned in the aftermath of UK set of economic issues that they faced, and the Cadbury Commission report rightly identifies certain core pillars, principles. And the governance, whatever the practice they propose, are overall looking at achieving those pillars. Another example comes from South Africa. We all know South Africa has gone through torrid times in terms of apartheid for many decades, and that is being reflected in King's Commission's report. Now, if you look at Sri Lanka's governance report, it's quite comprehensive, probably suitable for us as well. But what do we want to achieve? So it's easy for us to say it's more towards, say, shareholders or transparency. But should we make it more rooted, right, more towards us, rooted to our social economic context? And that's one of the things that I would love to see. And that would tell where we want to take our governance code. How are we similar or dissimilar to what governance exists around the world? And that is something I would look at. And also I think it's high time, when we look at the debate of current governance is mainly coming from, say, 1992's Cadbury Commission, and we took a significant change again in terms of going away from principle-based to a code-based, rule-based from the Sarbanes-Oxley Act because of the Enron. Now, companies fail. There could I basically group the company fail into two categories. Companies may fail because of poor leadership, business strategy failure, market conditions. So those are all business and managerial issues. Companies also fail because of fraud. So governance is, for example, is only a way to tackle these things. It's not, sometimes people just see it as a panacea or a solution. No, it's not a solution. It's only a process. But still companies have failed, like we know Satyam has failed, Enron failed, right? So they are going to be there. So it's a conflict between good practice and man's greed. So that's always going to be a challenge. So why governance matters to us? And I think that if the code could answer that, I think it would be really, really wonderful. And it could probably set us apart in terms of what we want to achieve. And that could be extended to other sectors. What we want, we have, for example, more than 400 state-owned enterprises in Sri Lanka. Right? Some are making losses, some are making profit. Do governance matter to them? And people in this country right now seems to be concerned about governance. But are we addressing that? Right? So whether we need that, so we have to look at that. And also how to support, say, the pulse of the economy, smaller set of industrialists, how we can support. So one size fit all may not be the best, but a general set of guidelines could be ideal, where other sectors could derive best practices to those sectors relevant for them. Right? I think that would be the way forward, rather than going into detail, okay, do this practice, that practice. I think we have to look at it from a more holistic perspective, and that's how I would love to see it going ahead.
Okay, thank you, Dr. Shamil. And also I would like to thank Mr. Tishan and also Ms. Semini for sharing your knowledge and also your exposures, your experiences at this forum. So in summary, so what we can say then regarding the corporate governance. Now when we take corporate governance, yes, we have a code, right? It mainly targeting the listed companies and also the other companies, and also we have the Companies Act. And however, what we have to consider, there is a separate set of businesses who make a very significant contribution to the national economy of Sri Lanka, right? So this is the SME sector. Then not only for the listed companies, we have to consider about some governance practices, that to bring some governance practices to these SME sector companies as well. And also not only that, when we are living in a country, then always the country also should go with the good governance practices, right? So therefore, that Dr. Shamil explained that in 2003 they introduced some governance code for the public state-owned companies as well. But thereafter, there's no any revisions or any other mechanisms to take that into the practice. So therefore, that public sector companies or public sector organizations also we have to bring under this governance code, right? So I'm not saying that it is the corporate governance code, but there should be some separate governance for targeting the SMEs and also the government sector, and then the public and private limited companies as well. So as Dr. Shamil correctly mentioned, there should be a holistic view when we consider the good corporate governance and good governance at all. Right, okay, thank you. Thank you.
Thank you.
Thank you very much.